Hello everybody, hope that you are well and welcome to tonight's Contenders live stream, number 85. We're going to be going through my liquidation trading strategy. This is a strategy that I have found, I enjoy, it works well, and now I'm here to share it. My mind, I'm not going to lie, is in slightly around in different places. I'm going to explain the situation. Basically about literally 5 minutes before this stream was going to start, I had a call from my mum who said my nan has fallen over. She's obviously an old lady and she's on the way to her house and yeah, they got the ambulance and stuff coming. I think it sounds like as if she already has a broken hip, and then so she's like falling over and I don't know, the ambulance and stuff is coming and yeah, there's that going on right now in my life. So I was like, well, I can't really stop the live stream because I'm meant to start in 5 minutes. So as soon as this stream ends, I am going to be on my way to the hospital. So this stream is probably going to be kept to the time of around an hour. Yeah, there's that. So apart from that, which was I don't know, I'm just going to try and focus on the stream and just do the content for you. So my mind is a little bit in other places, but nevertheless, let's go into it. So yeah, obviously this trade disclaimer, we got all this. So tonight's live stream, the chart of the week has been done by Mike. So if you aren't already aware, the chart of the week has Mike's done this in his own video. You can just go and watch chart of the week. We thought instead of keep putting it in this video, it makes more sense to have it in its own video. You can dedicate more time to it. Yeah, if you haven't watched chart of the week, that's basically in its own video. The video is
good afternoon,
15 minutes long, and you can go and check that out. So that's done in its own separate video that you can watch. And then obviously I want to go through tonight the liquidation trading strategy, and we'll end with questions. Yeah, to do with the strategy. What I might do, because of the circumstances, I might. Well, we'll see how it goes, but I might, if there's loads of questions, delay this and just do it tomorrow, just because I'm kind of eager to get out. We'll see what it goes in terms of time. Okay, I'm just going to try and focus on this and we'll get through it. So liquidation strategy then. So yeah, this is a strategy that I come about with just, I don't know, it's just like one of those things that you can kind of get these. Obviously, this is a strategy that's totally unique to me. It's not something that I've got from somewhere else. It's like a totally unique strategy. And it's just like I come around finding that this works by really simply looking at exo charts and seeing the same thing happen, you know, a lot of times. And then it's from seeing the same thing happen time and time and time again. And it's like, wow, there's a pattern behind this. And then once you recognize the pattern, you're going to try and put some rules to that pattern. And from the rules, you have a strategy essentially. Yeah, so this, I got this myself by just literally staring at the charts for 12 hours a day, you know, too much time probably on the charts. And that's how I got this strategy, by literally just looking at the same thing again and again and again and again. I was like, wow, there's a pattern behind this. I recorded statistics. There was a pattern. I started putting money on it, and yeah, this has an extremely high win rate. It's a really nice strategy. So here we go. That's what we got for you tonight. I hope that you enjoyed. So how do we trade this strategy? Really simply, what I'm looking for is looking for an area of consolidation at a pivotal level. So what we're generally going to be looking for is consolidation below resistance or consolidation above support. Okay, so it's really simply, you have to see an extended consolidation. This is 1 minute chart trading. So this is a strategy for a scalp trader only. So if you're a swing trader, then, so I got like this thing that helps with my throat. Sorry. This strategy is only for scalp traders. Okay, so if you're a day trader, if you're a swing trader, if you're a position trader, or you're a hodler sort of thing, you know, this strategy is not of no use to you. To be totally honest with you, this is literally only for scalp traders. You get in and you get out within maybe 1 minute, maybe 5 minutes. Okay, it's a very, 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 very quick trade, and it's definitely only for scalp traders. So we're looking for this setup to appear anywhere from the 5, more likely 15-minute chart is where you're going to get this setup, okay? But it's only for scalp traders. So what we're going to be doing is it's a mixture of looking at exo charts and just really simply looking at the price chart. Could I do this strategy with no exo charts? The answer is yes, I could. But obviously exo charts is something that's helpful, okay? You know, it's pretty helpful to have, although not a requirement. I could do this strategy by really simply looking just at the charts. I have exo charts, so I might as well use that, and I'll explain how we use that today. And I trade the liquidation wick for a quick reversal. So essentially we're looking at where traders are going to be liquidated, where they're over leveraging their trades. We're going to look to see the liquidation, and then we're going to basically buy people getting liquidated, because as we know, price likes to draw in liquidations and then basically reverse. So we got some examples here to begin with to really show you how we come about this. So there's this tool built into it's built into the program of Bybit. So again, I would use this strategy only on Bybit, and I will show you what the screen looks like. If we just go across to Bybit, and this is obviously the competition account, so we can just go into here, and you can see really simply what we have going on then. So the way that we actually first get the tool is within Bybit. You just click on this little calculator. With this calculator, you can get a liquidation price. And so what you want to do is, I'm looking for the times 100 leverages. So I'll type 100 in the leverage box. The quantity, you can put anything, so we can just put 1. And then what you're going to be doing is, for the price, you're going to look where there's a lot of, you know, basically the low of the consolidation. So let's say the low of the consolidation was 45,000. We would know that anybody longing 45,000 with 100 times liquidation is going to get liquidated at $44,776. Okay, so what we're going to be doing is basically looking to buy just below this price. Let's just see for an example what happened here. Okay, so for an example, 45,000. So let's just say, yeah, and this is actually a really good example. So you could just say people are buying here, and this is just a visual way. We can see there's this clear area of support here. Somebody's buying up the support. So what we'd like to do is we would actually try to buy 44,776. Okay, so which is 44,770. So it's basically this wick. Well, here's a live example that literally worked. So you would have basically been looking to buy as soon as you had the liquidation run here. And then you would have looked to actually take profit on, you know, the trade is, this trade literally was 2 minutes long. You would have bought the first liquidation just below this price, and, you know, you could look to take profit really simply on support resistance. In the end, this comes down again for a secondary test. I think this looks pretty bullish. Obviously, I'm in this long on this account at the moment. But yeah, that's where you get the tool, by the way. So it's this little calculator within Bybit, and then you go into liquidation, isolated, 100. You can enter anything for the quantity, it really doesn't matter. And then the price is where you view that consolidation. So we would literally say that, you know, yeah, but this is actually a really perfect example. The example that we have here is, I couldn't have asked for a better live example. And this is a live example to show you literally this strategy would have worked. You would have made money on this trade with 100% certainty. There's no way you would have not won money on this trade. So we actually have an absolute perfect example. How about that? That's really nice. And that's like literally live on the time. There's no hindsight. So that's what we're looking for there. This example was taken while price was at $17,000. So, you know, I've been sitting on this strategy a while. I've been testing it. I've been using it, and it's really good. So, yeah, you can see here. This would have been a price for a game from the 17th of November. I was saying, you know, this is where it's easy to see where times 100 longs were entered via exit charts. And then we use the calculator to see where they will get liquidated. We place the buy order below this and wait. So again, you can see here, I'm seeing that people are going to get liquidated after buying basically 17,700. Okay. After buying 17,700, I've entered the liquidation price. Okay. And I can see they get liquidated at $17,704. I'm going to be waiting with my buy order below that, because you don't want to wait at the price, because what happens is if price hits the liquidation price, they get liquidated and you get a big wick to the downside, don't you? So you don't want to literally buy the exact liquidation price, because when they get liquidated, they're going to add to the sell orders. So you get a bit more downside. So you don't want to buy it exactly under level, but wait for a little bit below it. This is the 1 minute chart. You can see, again, we'll go over extra charts so you can view this, but then see there's a really simply consolidation below resistance. You look to take everybody out before it reverses really to the upside, because the market doesn't like loads of people in the game. You want to try and get as much people out of the game as possible. It gets more liquidity in the market. So really simply, consolidation under resistance. So here we had consolidation under resistance, high volume around the consolidation low, high volume around the consolidation low. We're going to look for a quick leverage flush before a snapback reversal. You want to see this quickly come down and then really look for a reversal relatively quickly to the upside. Again, this trade's not going to be holding it for very long at all. Okay, so here we can look into exit charts. This is the same example here, and then this is where we're looking into exit charts. I didn't take the low of this, but nevertheless, you can see the zoomed in view. And this is from the 17th. Like, it's obviously live updates when I was posting it. And people were impressed because we looked for that liquidation price. People, as you can see here on exit charts, you can actually see people getting liquidated. So again, there's no guessing about it. We can see the hard, cold facts, the evidence. These little bubbles represent liquidations. So we're able to see that there's a lot of buy orders here. We're able to see on the charts the big bubble, which indicates people getting liquidated. That's obviously an entry for a long position. You buy the liquidations. Okay. Consolidation under resistance, high volume around the consolidation low. We can see the liquidations in exit charts. So these bubbles are people getting liquidated. They generally are going to give you reversal points in the market. Okay. So the entry can be preset with a limit order, e.g. you could preset your entry just a little bit below the liquidation price, or alternatively, market order as soon as it starts to turn around. So there's two ways you could trade it, literally. You can either preset with the limit order, waiting, or alternatively, you can mark it in as soon as it starts to turn around. And that would be once you see the bubbles of liquidation form, then that could be your market entry. Okay, once price starts to like uptick here slightly. So once you get the first little upticks, then, so let me explain this. Okay, obviously you got the limit orders. That's pretty obvious. The market order entry is when you get the bubbles form, that shows you there's liquidations. And then as soon as you get your first uptick, that would be, for me anyway, the market entry. Okay, so I'd enter as soon as I see those upticks. Which way is better of these two? I've used both of them, and I have no... what's better? One would say that the market order is quote unquote safer. You're going to buy only when you definitely 100% see the liquidations. Okay, so sometimes with the limit order, what I've noticed is that sometimes I'll anticipate there being a liquidation. There are no liquidations, and the trade is just going to instantly be a bad trade. So in that regards, the market order is better, but I've got pretty good at recognizing when I do most of mine with the limit order entries, to be honest with you. But, the market order is like a safer way of getting into the market, and it's absolutely fine to use the market order to enter on this strategy. And I would probably say that this is the best way to start off. And then when you have more experience with the strategy, then you can start to anticipate with limit orders. But the easier way is 100% with the market orders, and you're going to take a lot less losses. So the invalidation is always the wick. So what I mean by the invalidation is always the wick is that once you got those liquidations and the low of there is formed, the invalidation of the stop loss is going to go below that wick. So here we can see we had a flush, we had the liquidations, you have a low. Your stop loss is really simply the low of that candle. Okay, so on this view, you have the first move down. You could literally, let's say, enter at market. We'd enter at market 17,691. We could target maybe 17,800, 17,700, and our stop loss would be the low of the wick. The way that I would trade this is take profit one here, move stop loss to entry. I've got a risk-free trade, because sometimes you will see this continue up much higher. It does a quick snap, and then you could get a full-on reversal much higher than this. This is the liquidation run generally before a really big move to the upside. So I wouldn't close my whole trade here, but I'd look to take profit one on the SR, move my stop loss up to entry, let the rest run, and sometimes you can get some really nice running trades here for a very big increase in price. Okay. So yeah, invalidation always the wick low. You got to use that stop loss quickly. Okay, so here is another example of being able to see an area of consolidation below resistance. And again, what we're going to look for is the quick snap. So we've entered here the price 13,940, which is this consolidation low. We're then seeing people are going to get liquidated at 13,870. So we would want to place if we're placing below this, obviously you don't want to place at it, because if people are getting liquidated at this price, they're going to cause slippage through the market. So we want to place below this slightly. So consolidation under resistance. Liquidation price is also a swing failure pattern of the lows. Okay, so if these are our lows, the liquidation price here is also below the lows, which also gives you a swing failure pattern. So you can see we're combining theories here as well. We're combining a swing failure pattern entry with a liquidation strategy entry. Okay, entry a little bit under the liquidation price. Stop loss can only be set once the trade has been entered, not before. Okay, so you're not going to have your, you can't have a stop loss before you've entered the trade. Target is subjective. The reason why I say target is subjective is because generally speaking, it's going to be the first SR flip. But in like this example, it's not going to be that. So the target is obviously the subjective bit of this strategy, because there's no way you can always say this is going to be the target of the trade. Unfortunately, this is context dependent. It's, it is very subjective. You don't know where the target's going to be, because every single trade is going to be different. Generally speaking, you're going to look for the first SR flip, maybe the CC resistance, or let the trade run. There's endless ways that you could use for the target. The main strategy here is the entry. The entry trigger is the thing that you're learning about tonight. So the entry should always be below the liquidation price if preset. I think I've made that pretty clear. Targets are subjective. I personally like to be conservative, so that means I'll take my first take profit really quickly. I'll move my stop to entry, for example, and I'll let the rest run. But my first take profit on this strategy is going to be quick. I don't want to hold this trade for ages. I'm kind of just looking for a quick trade, and should be viewed as a quick scalp trade. Okay, so it should be viewed as you're not looking for this forever. It should be maybe a 5-minute trade. Okay, so now here we have an example using Patrick's candlestick template, where we had once again another setup of this using this template. And what you can see here is we see consolidation at 32,127, these lows. And you can see the reason why I like Patrick's template is because this was a really clear low. It was a really, really clear low. And what I'm saying is, let's try and get the liquidation there of 31,967. That's going to provide us our entry under, again, it's another swing failure pattern setup. So here you have a swing failure pattern setup with the liquidation strategy. It's really, really, really powerful. Okay, so consolidation under resistance, price swing failure patterns the low, and then you get that's a really, 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 really great trade. Okay. And obviously, if you're combining this with Patrick's strategy, you could look, for example, of high delta at the lows, maybe 100% delta at the lows, sign of that sign of like what's the word I'm looking for? Like an overextended move, essentially, when you get your 100% delta come in, and you're combining 3 different things together. You're combining high delta, you're combining swing failure pattern, you're combining the liquidation strategy. You're combining 3 different tools there. You got a really high win rate, or you have a really high percentage probability of winning that trade. So yeah, this is why I love the example that we have here, because as you can see, I've wrote here, I love this at psychological levels. So this was a psychological level that you actually had here, because if you see this 45,000, well, 45,000 is a round psychological number, isn't it? People are going to be trying to buy $45,000, and you can see here 1, 2, 3, 4, 5. So what would be saying, if people are buying $45,000, we're going to look to buy just below $44,776,000. So then we can liquidate the high leverage traders before snapping it back to the upside. And that was off of your psychological big number. So I love it at these sort of levels. It makes the trade even better, because loads of noobs are going to be buying those levels. For many people, longing thousands adds another confluence. Oh, sorry, I was even confused what I read. What I meant for it is what I mean by psychological. So, for example, $10,000, there's going to be a lot of random noob traders buying like 10,000 just because it's a psychological number. Okay. And what by psychological numbers, we mean those whole numbers that people just like place their orders at because it's easy or something. And footprint software adds confidence. This is what we mean with exocharts. Okay, so what we'll do here, let's go into exocharts and see what we have here at the $45,000 level. Okay, so we'll do this twice. We'll do this on this one. So if we load up, let's load up this, and then let's load up this. So at 45,000, slightly. Lag. So let's see what we had. CVD 252, 253 to 257. So you have bullish divergences on this low. 252. 252. No. Back to 250. So you have bullish divergences forming all along these lows, and this is pretty nice. So you can see here, what does it mean by bullish divergences? Well, it means you got the limit orders obviously trying to hold up the price here. And you can see the selling at the lows, 1.4 million, 800,000, 800,000, 900,000. So there's a few million here that we can see. Obviously, if this is a market order, limit orders are holding it up. You got bullish divergences here. So if you're simply saying that this is consolidation, okay, at a resistance, what we could say for this strategy is really simply, we could say, okay, we have bullish divergences here. We have a few million, longing here. The strategy is simply going to be saying to us, okay, we've worked out the liquidation price. Let's try and long essentially the liquidations. And you could see on here, this first one, you obviously had the move down to your level. If you had preset, where was the liquidation, did we say? So many windows, oh my god. 44,776. So if we come back here, 44,776. So yeah, you would have obviously got your move down just below that level, about $100 below the level, which is obviously you're never ever going to get hit on a stop loss on this. It's tiny in terms of percentage of these levels. You can see a lot of orders coming down on this. You're generally going to want to see that open interest decrease. You got the open interest decrease here. And what you might want to see is these rects. And there you go. You actually had an absolute perfect setup. Look at this. You have the rect candle. You have the decrease in open interest. And it was coming off of bullish divergences on the CVD. This was actually a really perfect setup that we were given here. You have everything. You have literally everything on this. So if you had preset your longs below this level, you would have won the trade. If you had marketed in after you got the initial reaction, wouldn't have been the best trade in the world, simply because you might have got eaten up on the market orders, to be honest here. How much was this in percentages? Let's say that you got... actually, no, I don't think you... Yeah, I think it would have been a profitable trade, whatever happened. So whether you had a limit order waiting, or even if you marketed in as soon as you saw the liquidation, you would have actually made money 100%, because this was nearly a 1% wick, which is really massive. So that would have 100% ended in money. Yeah, really, yeah, that 100% would have ended in money, whatever you use there, limit orders, market orders. And obviously this is generally what you're going to want to see. So you see the liquidation run, and then you want to see this like follow through like afterwards. So this is the thing, this is why it works really well, because here people highly leveraged trading are anticipating higher consolidation below resistance, and then they get taken out, and then price does what they were thinking. So basically you take everybody out of the market before doing what they thought. So it's like, how many times have you saw it where you place your stop loss, and then you literally get stopped out the move, and it goes up and does exactly what you were thinking? That happens to loads of people. So basically what we're going to be doing on this is taking people out of the market before reversing it, and then they're going to be thinking to themselves, wow, I just got stopped out and then price done exactly what I thought it was going to do anyway. They're going to be like, why do I use a stop loss? This is so annoying. And we're going to be sat there buying up their limit, or they're going to be getting stopped or liquidated, and we're literally buying their stop losses and liquidations. So yeah, this was a brilliant example that we actually had live in the time, which was really nice to see. So that was really nice. Yeah, so here we got the clear target. Well, I suppose this is I kind of just put this because we were using a sniper reference. Clear target. Obviously, the targets are not 100% clear because they're clear for me because I know what I'm doing. But I guess if you're really, really new to this, then you might not understand where the target is. But my target would be support. That's going to be my first take profit. We can let the second take profit run, and maybe we pump here all the way up massively, and we're like, oh, brilliant. We can have our stop loss at our entry, and maybe this pumps loads sort of thing, and then you can let it run. But the targets is generally going to be that SRCC. Quick exits. So you do want to take that first take profit quickly. If you hold on to this trade for too long, it just doesn't work. And even better entries. So we got clear targets, quick entries, clear targets, quick exits, but even better entries. The entries that you get on this is really, 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 really nice. Okay. So we're focusing on the entries of these and our sniper entries, where we literally get really, really nice entries. But talking about sniper entries, you want to see a really nice sniper entry? This is obviously my challenge account that I'm using for the competition that we got running at the moment. Currently 5th place in the competition. And I got to this 5th place by this sniper entry. Look at that for a sniper entry. Market was really, really, really fearful today, moving down to nearly 8%. I was there ready and waiting with this order. And how about that for a trade? That really is a brilliant sniper entry. Again, only 13,000, but the liquidity, this is 9 times leverage. Again, it's just for the competition, but there you go. Yeah, there's a sniper entry for you. Look at that entry. So yeah, we'll see if anybody has any questions then. I have messages saying I should reschedule the stream and go to the hospital. Well, so, yeah, I'm not. Yeah. We'll see if there's any questions. We can do the next one. I don't mind staying for another 15 minutes to do these questions if there are any. I'm speaking to Victor here. if there are questions, I'll do them now. I'll give you a few minutes to see if you want to post them. If not, then I suppose we'll do them tomorrow. But I'm okay if you want to do the questions now. Could have asked some questions, so we'll do these, and yeah, then I'll probably head off. So, is there a general percentage for the additional downsides you can expect on those orders are liquidated? Yeah, generally, you're going to be looking for maybe an extra 0.2%. So if if an order, let's say you're looking to buy, and that liquidation is obviously a sell order. So if you're at a high liquidity region, then you could expect those sell orders to be, 1, 5, 10 million. And so this is generally going to, obviously the more people liquidated, the bigger that percentage is going to be. But yeah, really at least you're going to be looking for 0.2% around that sort of region. 0.2% is a nice barrier that's going to liquidate several million people. So I'd generally say 0.2%. This is where the market orders obviously going to sometimes get you better entries, because if you are liquidating a lot of people, if you preset your limit order at 0.2%, but then the wick is for 0.5%, you have to be quick with these things. But if you're quick on it, you see the decrease in open interest, you see you see that wrecked bubble of liquidations, and you market order in there, you could get a 0.3% entry better than if you had limit orders. So there, your market order is going to get you a better entry price. So obviously there are clear advantages of doing it via market order. You're going to take less losses and you could get a better entry. But yeah, for limit orders, you're going to be looking for, I'd say, about 0.2%. A little bit context dependent, but 0.2% is nice. Do you calculate liquidations in both directions or only looking for the late long and shorts to get rid? So if you're consolidating at resistance, you want to look for longs. And if you're consolidating at support, you want to look for shorts. Because if you're consolidating at support, you want to liquidate people before going down. If you're consolidating at resistance, like we see here, then you want to basically, this is support into resistance, and we can say we're consolidating on the SR flip. To be fair, like that's literally what was happening. Is what's happening here. So we want to look to liquidate people before price goes back up. This honestly was a gift of an example that we had literally live here. So yeah, that's the way that you look for that. Does the opportunity to use this strategy become more frequent in trending markets? Yes, so this is really, 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 really important. I would like to really use this strategy only when there's a lot of volume in the market. Okay, today the volume is massive. Okay, so today the volume is massive. This is a brilliant, brilliant, brilliant time to use this strategy. If the market's really slow and not doing anything, then I wouldn't even think about doing this strategy. So this is really dependent on, you want to see a lot of volume. And if you look today, we had 5.8 billion volume. This is a really high volume day. Yeah, this strategy works best when you got a lot of activity in the market. So if the market's doing really, really, really slow, it's like, you just have that feel, it's not that hard to get that intuition anymore of just like, when the market's dead and it's really not doing anything and it's so slow, it's really boring. This strategy is obviously not going to work on that because you don't have the people trading to liquidate. The strategy works best in a trending market, really quick, really high volume market. Yeah, I'd actually say that's such a good question. That's almost a requirement. So I would never, ever, ever use this strategy on a slow, low volume market where it's going sideways and it's really like quote unquote boring. I'd only use this strategy when the volume is really high, when there's lots of volatility, and you have lots of interest. Okay, and today is a perfect example of that. Really, really is. So great question. You said to place your entry slightly below the liquidation. Yes. Have you found a percent? Same question, basically. I'd say generally look for 0.2%. But again, if you use the market entry, which I kind of recommend to begin with, if you use the market entry, then you don't have to look for 0.2%, 0.1%, 0.5%. You can get in when you see that liquidation bubbles, you see the decreases in open interest, and you see the first uptick. You just need that first uptick or the buy wall to come in, for example, if you're trading on Bybit. What do I mean by the buy wall? You start to see that like this is a buy wall, 3 million buy wall, for example. That's going to hold the market up. You're going to generally get an uptick as soon as that forms. You got your entry, obviously at market. So yeah, if you want to enter with limit orders, the reason why it's so context dependent is because if you're being held up with bullish divergences, for example, and you're seeing at the low of that like 20 million, then obviously you're going to expect a bigger percentage than if you're only seeing 3 million there. If you see 200 million there, you're going to be like, wow, this is just liquidates. Then we could see like a 1% wick to the downside, which would be massive. Whereas if it's literally 3 million, then you're not going to be expecting anything massive. But that's obviously the advantage of the market order. You don't need to anticipate it so much because you're basing it off of the reaction. So again, I do think that the market order has a lot of positives. It has more positives than negatives. So if we compare them both, the market order has more positives than the limit order. I think you're going to take more wins with the market orders. You're going to get average. You're going to get better entries. The only thing that you have to compare is the fees. And if you're only going for a 0.2% move, then obviously the fees are going to be eating you on the market order. So again, this is so context dependent. What do I mean by that is every single trade is different. We don't have the same percentage trade on every single trade. And I'm sure you all understand that. Cool. So those were the questions. Yeah, so this is on Patrick's template, and you can see that, look how nice this is then. So if we just highlight this on this template, this is really, really, really clean. So you see how you had such an obvious support here. You had the bullish divergences on the CVD, and then here are your liquidation candles. So like you have absolutely everything. There's your decrease. We obviously know there was our decrease in open interest. There was your clear support with your bullish CVD. There was the liquidation run, and there's your instant snapback. Honestly, it's such a perfect example. Really, really. Oh my God, look at this then. And this is what I mean, that this is so perfect. Look at that. 100%, and then you go into your 95% on 10 million. This is like your 100% most perfect setup I could have shown you. Look at that, 10 million. This is really, really, really high on 95% negative delta. Come on, this is the most perfect example I could have ever shown you. Bullish CVD, liquidation run, there's the wrecked bubbles, there's the negative 95, 100% delta on minus 10 million. There's your reversal candle that follows it. Again, this is using the trend reversal. There's your trend reversal candle. There's your instant snapback. That's such a perfect example. Honestly, that is so perfect. It's unreal. It's so perfect. Yeah, that's a really, really great example, to be honest. Next champion. Oh, so this is just talking about on the next champion stream, which is obviously going to be on Sunday. On Sunday, we'll continue going over our setups. I suppose like what I do on the Sunday stream is starting a chart from scratch, deleting all my technical analysis, going through the charts and working out an entry, a stop loss, and a take profit. Essentially finding a setup on stream and explaining the reasons why. So if you were interested in a setup like that, then, or the theory of how I get to my setups, then that's on the next champion stream. We'll end with a summary of the key points that we've gone through tonight. So, a liquidation strategy. The whole strategy is based off of liquidating traders before reversing. The trades must be taken quickly. You're not going to want to hold on to this trade for ages. It's very much scalping trades. And the invalidation is simple, and so is the entry. The invalidation is always the low of the wick. That's where you put the stop loss. And the entry is also very easy. You know, you look for that open interest. If you use like Patrick's template, you're going to look for that high delta, and you look for the wrecked bubbles, and you know when that's equaling liquidations. Like the entry is so easy to get, and the invalidation is even easier because it's just the low of the liquidation wick. And to be honest, the first target is generally your SR flip. But again, the target is going to be a little bit in the air. But it's such a nice strategy. You literally have everything there. A rule set to get in, a rule set for the stop loss, and pretty much a rule set for the take profit. I mean, you have literally everything there. And I'm telling you, this has such a high win rate. It's absolutely crazy. Like, this is such a good strategy. Why? I mean, this is probably the thing. Why is this such a good strategy? It's because it is fairly advanced. I mean, it's also unique. I've never, ever seen somebody trading this. Well, literally, I made this strategy, so this is totally unique. That's also probably why it's really good. But yeah, I mean, I'm happy with the strategy, and now you can try it as well. I suppose there's quite a high barrier for it. The reason why it works so well is it's scalping strategy. It's on the 1 minute charts. Not many people are interested in 1 minute charts. It has, you know, it's based off of liquidate. I don't know. It just works. So I'm not going to overthink it. It works. And again, how did I find this strategy? It's just by simply spending hours upon hours upon hours upon hours on the charts, doing this every single day, and then seeing to myself, wow, I keep on seeing this same thing. And then it's starting to record the statistics, backtesting. You know, you can go back and check and see if it's when it's worked, when it's not. I don't really like to backtest. I just like to actually see record going forwards. I'm not a person that spends hours backtesting. Either way I do my statistics is going forwards. So I want to know whether it's relevant now and whether it's relevant for the next 20 trades. I don't care so much about the last 20. I want to know going forwards, how is this working? So when I see something that I like, that's when I'll start that's when I will personally start my statistics. I don't care about backtesting so much, but yeah, it's as simple as experience, recognizing, testing, putting money on the trade, thinking, yeah, this really works, and then I can share it. So that's shared then, isn't it? So brilliant. So that's the stream. About 40 minutes long. I don't know. I think I've covered everything that I wanted to cover in terms of the content here. I hope that is, it's not that difficult, to be honest. Like, when you understand and recognize what to do, not that difficult. And then we also saw perfectly, we actually saw in a live example tonight, which I think was really special, pretty nice that we were given that. So I can see there's no other questions that have come in inside of the Discord anyway. Again, if you do have any questions maybe going through the rest of the night, as always, you can just post the questions in trading help or general. It's probably best trading help, because the problem with general chat is it's so busy, it's very hard to view all the, your question can be easily missed. Let's just put it like that, because there's too many messages. Because in trading help, it's generally not going to get, the high percentage chance it doesn't just get missed because of an influx of lots of questions. Yeah. Hope you've enjoyed, hope you've understood, hope you've learned something. I am more than happy to share and help. Hope this was good, and I hope you understand why I am cutting it short for tonight's stream. Yeah, so yeah, I'll compensate, I suppose, by doing another members stream for you. But now I'm gonna head off. I'm gonna get dressed and head to the hospital. So there you go. Thank you ever so much, everybody. Have a good evening, and thank you once again. Goodbye. Cheers.